In the issue of shares, these are the different cases. The first one is issue of shares at par, at discount, at premium. And the next one is calls in arrears and calls in advance. The issue can be two different forms. One is under subscription and over subscription. And the next one is the forfeiture of shares and reissue of shares. So these are the different cases which comes under issue of shares. In the previous video, we have discussed about issue of shares at par, at discount, at premium, calls in arrears, under subscription and over subscription. So in this video we are going to see two problems, one for calls in advance, another one for forfeiture of shares and reissue of shares under pro-rata allotment. Now let us see the first problem. See the first problem, this one for calls in advance. Calls in advance means when a company accepts money from the shareholder in advance towards calls not yet made by the company. Such amount are termed as calls in advance. So let me explain with this problem. See, X Limited issued to the public 10,000 equity shares of rupees 10 each, payable as follows. So each value is 10 rupees. On application 3 rupees, on allotment 5 rupees, on first and final call 2 rupees. Altogether how much? 3 plus 5, 8, 8 plus 2, 10 rupees. All the shares were subscribed for and all money due were received. So how many applications offered by the company? 10,000 equity shares, no. So all the shares were subscribed by the public, entire amount is paid. Okay, so here John, a shareholder who subscribed for 500 shares, paid the call money along with the allotment. Okay, so again I repeat, John, so one of the shareholder, his name is John, a shareholder who subscribed for 500 shares, paid the call money along with the allotment money. So this is called as calls in advance. Okay, he has paid call money for how many shares? 500 shares along with the allotment money. So now let us see the journal entry. They ask you to pass journal entry to record the above transaction. See the format: date, particulars, ledger folio, debit and credit. Look at the problem. The first transaction is on application 3 rupees paid. So how many applications are offered by the company? 10,000 shares. All the shares were subscribed. So all the entire 10,000 shares money received. That is application money received from the public. How much? 3 rupees. No, 10,000 into 3 rupees. Entry for the transaction is bank account data to share application. That is application money received. You have to write the narration. Being share application money received. How much? 10,000 into 3 rupees. No, 30,000. Okay, so after receiving the application money from the public, what is the next entry? Transfer entry. So you have to transfer the entire amount to share capital. Entry for the transaction is share application account data to share capital. Write the narration. Being application money transferred to share capital. 30,000. See the problem. On application 3 rupees. So 3 rupees into 10,000, 30,000 rupees received from the public on application, and the entire amount is transferred to share capital. And the next one is on allotment. How much money? 5 rupees. For each share 5 rupees on allotment. So now you have to make the entry for allotment money due. Allotment money due entry is share allotment account data to share capital. How much? 10,000 into 5 rupees, 50,000. Write the narration. Being allotment money due. So this is the entry for allotment money due. Share allotment account data to share capital. Next you have to make entry for allotment money received. Okay, before you make entry, just see the adjustment. John, a shareholder who subscribed for 500 shares, paid the call money along with the allotment money. The call money is 2 rupees. No, 500 into 2 rupees, 1000 rupees. The 1000 rupees he has paid along with the allotment money. So this is called as calls in advance. Now let us see the entry. Bank account data to share allotment to calls in advance. See, this is the entry for allotment money received, that is bank account data to share allotment. But in this problem, one of the shareholder paid calls money along with the allotment. So this is called as calls in advance. Here you have to show how much amount he has paid along with the allotment. So we are supposed to receive only 50,000 on allotment. Okay, so put 50,000 for allotment, and one shareholder, his name is John, he has paid 500 shares allotment money. Allotment money is 2 rupees, no. So 1000 rupees paid along with the allotment. See, at the time of allotment, company has received 51,000. 50,000 it's the actual allotment money, and the 1000 rupees is called calls in advance. This is the entry in case of call money received in advance along with allotment. Write the narration. Allotment money received on 10,000 shares at 5 rupees each and calls in advance 1000 rupees. See the narration. Allotment money received on 10,000 shares at 5 rupees each and calls in advance received on 500 shares at 2 rupees each. The last one, on first and final call rupees 2. Now we have to make due entry and received entry. Entry for the transaction is, that is first and final call due entry is share first and final call account data to share capital. Okay, so being first and final call money due. How much? 2 rupees. No, 10,000 into 2, 20,000 rupees. And the last entry is you have to make entry for first and final call money received. This is the entry for call money received, that is bank account data to share first and final call account. But in this problem, one of the shareholder who has paid 500 shares, that is 500 into 2 rupees call money, paid along with allotment, that is calls in advance. That amount should be debited here. The remaining amount will be received from the rest of the shareholders. So 1000 rupees debit, remaining 19,000 you can receive from the other shareholders. Total 20,000. So you are supposed to receive 20,000 for first and final call, but 1000 rupees already received. No, that amount should be debited. The remaining amount will be received from the remaining shareholders. Altogether 20,000 rupees. This is in the case of calls in advance. See the previous entry. Here calls in advance is credited. No, this 1000 rupees you have received in advance. This amount should be debited when we receive the entry. See, debited calls in advance, the same amount 1000 rupees. Now let us see the second problem. In this problem we are going to see forfeiture and reissue of shares allotted on pro-rata basis in case of oversubscription. Okay, now let me explain what is the meaning of forfeiture and reissue. Forfeiture means if the shareholder fails to pay allotment money or call money, that shares will be taken away by the company. That is, the company can seize the shares from the shareholder in case of default. This is called as forfeiture. Reissue means after forfeiting the shares from the shareholder, the company having the rights to reissue those shares to anyone. This is called as reissue. Now, see the problem. ABC Limited issued for public subscription 10,000 equity shares of 10 each. How many shares? 10,000. Just underline 10,000 equity shares of 10 each at a premium of 2 rupees. So this premium will be adjusted towards allotment. It's a usual procedure. Okay, as follows. On application 2 rupees per share. On allotment 5 rupees per share. On first call 2 rupees per share. On final call 3 rupees. Now get the total. 2 plus 5, 7. 7 plus 2, 9. 9 plus 3, 12. Okay, the face value of share is 10 rupees and 2 rupees premium. Total 12 rupees. No, that extra 2 rupees premium is adjusted towards allotment. So actual allotment money is 3 rupees plus premium 2 rupees. So total 5 rupees is there. Applications were received for 20,000 shares. See how many applications offered by the company? Only 10,000 shares, but the public applied for 20,000 shares, which means Oversubscription. So oversubscription means, see, company offered only 10,000 equity shares, but the public applied for 20,000. The extra 10,000 is called oversubscription. Allotment was made pro-rata. I already explained about pro-rata. Now let us see the pro-rata while we make entry. Pro-rata to the applicants for 14,000 shares. So these are the important information. You have to note it down. See, company offered 10,000 shares. Public applied for 20,000 shares. But the company can allot only 10,000 shares. But here they have mentioned that the application for 14,000 shares were allotted. That extra 4,000 shares allotted, no, that is called as pro-rata. That will be adjusted towards the allotment money. Okay. The remaining applications were refused. Refused means rejected. How many applications were rejected? Out of 20,000, 14,000 shares were allotted. So remaining 6,000 shares were refused. That is returned. Money overpaid on application was utilized towards sum due on allotment. So this is called as pro-rata. Money overpaid means company can allot only 10,000 shares, no, but here they have allotted 14,000. That extra 4,000 money will be adjusted towards allotment. So this is called as pro-rata allotment. I'll explain again while we make the journal entry. Then next point, Jack, to whom 600 shares were allotted, failed to pay allotment and calls money. Okay, so one of the shareholder, his name is Jack, to whom 600 shares were allotted. Okay, so we have allotted 14,000 shares, no, that is 10,000 actual and extra 4,000 shares towards allotment money, no. So in that, Jack, to whom 600 shares were allotted, that is one of the shareholder, failed to pay allotment money and call money. For how many shares? 600 shares. Okay, then again another shareholder, his name is Jonas, to whom first one is Jack and another one is Jonas. So Jonas, to whom 1,000 shares were allotted, failed to pay the two calls. So look at the problem. Here we have first call and final call. The first person, that is Jack, failed to pay allotment money, first call money and final call money. For how many shares? 600 shares. And second one, Jonas, to whom 1,000 shares were allotted, failed to pay only calls. That is first call and final call. He has paid allotment money and application money. He has failed to pay only calls. That is first call and final call money. Okay. So now these shares were subsequently forfeited. Okay, so these shares means both the shares, that is 600 shares and 1,000 shares. 600 shares from Jack and 1,000 shares from Jonas. These shares were subsequently forfeited after the final call was made. This information is very, very important because company can forfeit after allotment or after first call or after final call. But according to this problem, these shares were subsequently forfeited after the final call was made. The company has given sufficient time to shareholder. That is, they have made first call and they have made final call. So after the final call only, the company subsequently forfeited the shares from shareholder. All the forfeited shares were sold to David as fully paid up at rupees 8 per share. The reissue price is 8 rupees. Okay. So after forfeiting the shares from Jack and Jonas, the entire share, that is 600 shares plus 1,000 shares, totally 1,600 shares. All the forfeited shares were sold to David as fully paid up at rupees 8 per share. Okay, with this information, they ask you to make journal entries in the books of ABC Limited. First, you have to make entry for application money received. For that, just see how many applications received by the company. Applications were received for 20,000 shares. No. So 20,000 into 2 rupees, 40,000. So what is the entry for that? Entry for the transaction is bank account data to share application. How much? 20,000 into 2 rupees, 40,000. Write the narration being application money received. Okay, so next entry is after receiving the application money will be transferred to share capital. So entry for the transaction is share application account data to share capital. See, we cannot transfer the entire 40,000. Why? Because company received 20,000 shares, no, but the company offered only 10,000 shares. So here you have to transfer only 10,000 shares to share capital. Okay, so 10,000 into 2 rupees, 20,000. This problem is oversubscription, that is pro-rata allotment. No, see, out of 40,000, 20,000 rupees transferred to share capital, and you have to show the remaining 20,000 in the next entry. So we can make combined entry or separate entry. So here I am going to show separate entry for pro-rata allotment. Write the narration being application money transferred to share capital. See, we have made first entry for application money received. So, how many applications were received by the company? 20,000 shares. No. So, 20,000 into 2 rupees, 40,000 we have made the entry. And the next one is allotment was made pro rata. So, pro rata allotment was made for how many shares? 14,000 shares. Okay, and the remaining amount, the remaining applications were refused. Remaining application means 20,000 minus 14,000 is equal to 6,000. That 6,000 is returned. Okay, the excess 4,000 is pro rata. That amount is adjusted towards allotment. So now we have to write the combined entry for pro rata and returned money. Entry for the transaction is share application account data to share allotment for prorata and share application account data to bank for rejection. So now I am going to write combined entry. Share application account data to share allotment to bank account. So this is the combined entry for two transactions. One transaction for rejection. So what is the entry for rejection? Share application account data to bank. This is for rejection entry. How many applications were refused? 6,000 shares. That is out of 20,000 shares, 14,000 shares pro-rata allotment, the remaining 6,000 shares returned. So entry is share application account data to bank, 6,000 shares into 2 rupees, 12,000 rupees. And the company allotted pro-rata for 14,000 shares. So 10,000 shares actual allotment and that extra 4,000 is called pro-rata. No, that excess amount will be adjusted towards allotment money. So entry for the transaction is share application account data to share allotment. For how many shares? 4,000 shares. So 4,000 into 2, this is the extra money which the company received at the time of application money received. Okay, this amount is not returned to any shareholder. This amount is maintained or adjusted towards allotment money. This is called as pro rata. Okay, but the company can allot only 10,000 shares. That share is already transferred to share capital. That extra 10,000 share is there, no. So in that 4,000 adjusted towards allotment and 6,000 returned to shareholder. So this is the combined entry. Again I repeat, share application account data to share allotment for pro rata and for rejection share application account data to bank. How much? 8,000 here and 12,000 for rejection. Totally 20,000. See the first entry. Company received 20,000 shares. No, 20,000 into 2 rupees, 40,000. In that, company can transfer only 10,000 shares which is offered by the company. So that amount can only transfer to share capital. Okay, 20,000. That remaining 20,000 is there, no. So that 20,000 can be adjusted in two different ways. One is 8,000 towards allotment and 12,000 rejected. Here I have made two entries. One entry for transfer and another entry for prorata and rejection. So we can make combined entry also. For both the things you can make one entry. Entry is share application account data to share capital, to share allotment, to bank. But here I have made two separate entries. Write the narration. Being 4,000 shares adjusted towards allotment and 6,000 shares were rejected. Now, second thing, that is on allotment. So now we have to make allotment money due entry and allotment money received entry. So on allotment, 5 rupees per share. In that, 3 rupees actual allotment money and 2 rupees is premium. I told you, no, if there is any premium and discount, that will be adjusted towards allotment only. So 5 rupees, 3 rupees allotment, 2 rupees premium. So now we have to make allotment money due entry. Entry for the transaction is share allotment account data to share capital to security premium. Okay. See, how many applications were allotted by the company? Company can allot only 10,000 shares. Okay. So 10,000 into 5 rupees. 50,000. In that 3 rupees is actual allotment and the remaining 2 rupees is called security premium. Okay. So 30,000 and 20,000. Share allotment account data to share capital 30,000 and to security premium 20,000. Write the narration. Being allotment money due. The next entry is allotment money received. Entry for the transaction is bank account data to share allotment. Okay, so before you write the amount, you have to show the working notes because this is pro-rata allotment. That too, that extra amount which you have received along with the application, that amount will be adjusted towards allotment. No. So now we have to show the complete working note separately. So after preparing the working note, then only you can able to enter the value. So entry is bank account data to share allotment. So how much amount you are supposed to receive from the shareholder for allotment money due. Now let us see the working note. Working note 1. Calculation of amount received on allotment. See, first you have to write amount due on allotment. See the previous entry, 10,000 shares, okay, into 5 rupees. No. So how much allotment money due? 50,000 is due. Okay. But we have already received 4,000 shares into 2 rupees. Okay, see the entry. See the third entry. We have already received excess amount, that is 4,000 into 2 rupees, 8,000. No, this 8,000 we have already received along with the application money. That amount is adjusted towards allotment. Now you can subtract this surplus money from the allotment money due. Subtract surplus money on application adjusted to share allotment. How much? 8,000 rupees. No. So now subtract the excess amount which we have already received along with the application. So how much amount balance? 42,000 rupees. So we are supposed to receive only 42,000 from the shareholder on allotment money. But now see the adjustment. Jack, to whom 600 shares were allotted, failed to pay allotment and call money. Now we are calculating amount received on allotment. No, in that 600 shares, that is the holder of Jack, he has failed to pay 600 shares on allotment. So from 42,000 you have to subtract amount not received on 600 shares allotted to Jack. This calculation is required in order to find how many number of shares applied by Jack, because company allotted him 600 shares. So you need to find how many shares applied by Jack. See, this problem is pro-rata allotment. No. So if the company allotted only 10,000 shares, but the shares applied is 14,000. So out of 14,000 they have allotted only 10,000. Okay, applied 14,000, allotted 10,000. See, if allotted 600 shares, then how many shares applied by Jack? Okay, so this can be calculated by finding cross multiplication. 14,000 into 600 divided by 10,000 is equal to 840. See, 14,000 applied, 10,000 allotted. Then 600 allotted. Then how many applications applied? So Jack applied for 840 shares and the company allotted 600 shares. That is 14,000 into 600. Cross multiplication. 14,000 into 600 divided by 10,000. You will be getting 840. Okay. So how many applications? Excess application 600 allotted and 840 applied. What is the difference? Applied 840 and allotted 600. So extra 240 is there, no? So application value is 2 rupees. So 240 into 2 is equal to 480. This 480 is a surplus amount which received along with the application. So this 480 is a surplus money on application. Okay, now you have to find how much amount is due for 600 shares on allotment. Therefore, amount due on allotment. How many applications fails to pay? 600. No, 600 into allotment value 5 rupees. So 3,000. So this is the allotment money due for 600 shares. In that, just subtract a surplus money which we have already received along with the application. That we have calculated with the help of this calculation. How much? 480. No. Amount received on application. That is excess money. 480. Subtract 480 from due amount. Now 2,520 is the actual amount we are supposed to receive from Jack. For how many shares? For 600 shares. On the whole, for the total shares, 42,000 is due. That is 50 minus 8,000 is equal to 42. No, in that 2,520 is the amount which is Jack need to pay, and this amount is failed to pay by Jack. So now subtract 2,520 from 42,000. The remaining amount is 39,480 received on allotment. So this is the amount received on allotment. Okay, you have to do all these calculations in order to find how much amount received on allotment. I repeat again. Amount due on allotment is 10,000 into 5, 50,000. In that 8,000 rupees we have already received along with the application. No, that excess money. The surplus money will be subtracted from the due money. The balance 42,000 yet to receive from shareholder on allotment. In that, one shareholder, his name is Jack, he failed to pay 600 shares money. Okay, so for that you have to calculate how many applications applied by Jack. For this, public applied for 14,000 shares and company allotted 10,000 shares. In the same way, the company allotted 600 shares to Jack. Then you have to calculate how many number of applications applied by Jack. So for that you have to do the cross multiplication. That is 14,000 into 600 divided by 10,000 is equal to 840. That is 840 shares applied by Jack, but the company allotted only 600 shares. The extra 240 shares is there. No, the 240 is called surplus money which they have received along with the application. That is prorata. So how much amount they have received along with the application? Application value is 2 rupees. No, so for extra applications 240. 240 into 2 rupees 480. This is the amount is called surplus money on application. Now therefore amount due on allotment for Jack, that is 600 shares. 600 into 5 rupees 3,000. No, in that 480 which we have already received along with the application. So subtract that excess money. Amount received on application, surplus money 480. Balance 2,520 yet to receive from Jack. But the Jack failed to pay 2,520 for how many shares? 600 shares. So actually 42,000 yet to receive and subtract failed money, that is 2,520. Balance 39,480 actually received from shareholder on allotment. Now we can enter this amount in the journal entry. This is the entry for allotment money received. Bank account data to share allotment. Amount how much? 39,480. You have to show the complete working notes, and after doing the working notes only you can able to fill the amount column. Write the narration being allotment money received. So far we have made entry for application and allotment. Now we have to make first call money due. So on first call rupees 2 per share. So 10,000 into 2 rupees due money on first call. Entry for the transaction is share first call account data to share capital. That is due entry. Write the narration being first call amount due. So how much? 10,000 into 2 rupees. No, 20,000. Next entry is first call money received. Entry for the transaction is bank account data to share first call. Write the narration being first call money received. Okay, so before you enter the amount which you have received on first call, see the adjustment. Jack, to whom 600 shares were allotted, failed to pay allotment and calls money. So calls money means both first call and final call. So Jack failed to pay first call, and Jonas, to whom 1000 shares were allotted, failed to pay two calls. Two calls means both first call and final call. So both the parties failed to pay calls money. Now you have to make entry for first call money received. So we are supposed to receive 20,000. That is 10,000 shareholders. No, so 10,000 into 2 rupees. So we are supposed to receive 20,000, but the actual amount received is 600 shares and 1000 shares. So 600 shares for Jack, and Jonas 1000 shares fails to pay first call money. So 600 into 2 rupees, 1000 into 2 rupees. 600 into 2 how much? 1200. 1000 shares into 2 rupees, 2000. So totally 3200 rupees not yet received from Jack and Jonas. We are supposed to receive 20,000 on first call, but we have received only 16,800. The reason is Jack fails to pay first call, that is 600 shares into 2 rupees, and Jonas failed to pay first call for 1000 shares. 1000 into 2 rupees, 2000. Total 3,200. So out of 20,000, 3,200 not yet paid by two shareholders. The remaining 16,800 received from rest of the shareholders. So total amount received on first call how much? 16,800. Now we have to make a due entry on final call. On final call, rupees 3 per share. Entry for the transaction is share final call account data to share capital. Being final call money due. How much? 10,000 shares into 3 rupees. So 30,000. Okay. Next entry is final call money received. Entry for the transaction is bank account data to share final call. Being final call money received. Look at the problem. Jack, to whom 600 shares are allotted, failed to pay allotment and calls money. So calls means both first call and final call. So he has failed to pay second call money also. And Jonas also failed to pay 1000 shares for two calls. Two calls means both first call and final call. So 600 into final call value 3 rupees and 1000 shares into final call value 3 rupees. 600 into 3, 1,800, and 1000 into 3, 3,000 rupees. Total 4,800 not yet received from two shareholders, Jack and Jonas. Total 4,800. So how much amount we are supposed to receive on final call? 30,000. No. So subtract 4,800. Balance amount received on final call 25,200. Write the amount 25,200. So far we have made entries for share application, share allotment, first call and final call. Everything is over. Now look at the problem. The last adjustment is These shares were subsequently forfeited after the final call was made. So we have made entry for final call. Now the company decided to forfeit those shares. Which shares? That is a 600 from Jack and 1000 shares from Jonas. Totally 1600 shares forfeited after the final call. This is very important, after making the final call. Now you have to make forfeiture entry. According to this problem, entry for forfeiture is share capital account data, security premium account data to share allotment account to share first call account to share final call account to forfeiture share. Okay, so this entry is very important for forfeiture. See, when we make forfeiture entry, you have to take what are the items that the shareholder fails to pay. So according to this problem, Jack failed to pay 600 shares on allotment. So you have to record how much amount he has not paid. For that you can refer the working note. For 600 shares, how much amount he has failed to pay? 2520. 2520. Okay, so on allotment. So in allotment we have premium. The shares can be issued in three different forms: at par, at premium and at discount. So whatever it is, in case of a premium and discount, that will be adjusted towards allotment. Here 600 shares fails to pay, no. So in that premium also is there. So what is the premium value? 2 rupees, no. So debit that premium. 600 into 2 rupees, 1200. Okay, so allotment is over. Now go for the first call. For first call money, how much amount both the shareholders fails to pay? Just see the previous transactions. First call, the company is supposed to receive 20,000, but the company received only 16,800. What is the difference? 3,200. No, this 3,200 failed to pay by both the shareholders, Jack and Jonas. First call failed amount is 3,200. In the same way, just find the value for final call. For final call, the company is supposed to receive 30,000 from shareholders, but the company received only 25,200. 4,800 failed to pay by Jack and Jonas. Total 4,800. No. Final call 4,800. Okay, now you have to fill the amount for share capital. So totally how many shares forfeited? 1,600 shares. No. So 1,600 into, you have to write called up value. So called up value means, according to this problem, after making the final call only, the company decided to forfeit. That is, they have made application, allotment, first call and final call. Look at this sentence. The shares were subsequently forfeited after the final call was made. So after the final call means the company have made everything, that is application, allotment, first call and final call, everything is over. So you have to take the called up value. So called up value is, what is the face value? 10 rupees. No, just take 10 rupees. Called up value is 10 rupees. Okay, excluding premium, because we didn't add premium, we have shown separately premium. Okay, here you have to take only the face value of shares, that is 10 rupees, because in this problem, after making the final call only, the company decided to forfeit. Okay, if the company forfeit before final call means just subtract 3 rupees. If the company forfeit before the first call means subtract 5 rupees, because you have to take only called up value. That called up value is 10 rupees. That too, it's a face value. Okay, excluding premium. So 1,600 into 10 rupees, 16,000. Now you have to find the balancing figure for forfeited shares. Balancing figure. So debit side 16,000 plus 1,200, totally 17,200. Credit side 2,520 plus 3,200 plus 4,800. Now find the balancing figure. The balancing figure is 6,680. Okay, this is the amount for forfeited shares. Okay, this is a benefit for the company for the forfeiture of 1,600 shares. Now you have to make entry for reissue of those shares. See the next point. All the forfeited shares were sold to David as fully paid up at rupees 8 per share. So now we have to make entry for reissue. Entry for the transaction is bank account data, forfeited share account data to share capital. See, the entire shares which is forfeited from the shareholder, all the shares were reissued to David. Okay, entry is bank account data, forfeited share account data to share capital. Here, the reissue value is 8 rupees. No. So, 1600 shares into 8 rupees. So, actually the face value of share is 10 rupees. No. So, excluding premium. So, 1600 into 10 rupees. The difference is 2 rupees. So, 1600 into 2 rupees is just like a discount that will be shown as forfeited shares. So, it is a loss for the company. The face value of share is 10 rupees, but the reissue value is 8 rupees. The difference is 2 rupees. No, this is just like a discount or it is a loss for the company. So, debit forfeited shares. Debit all expenses and losses. No. So, debit side forfeited shares account data. So, 1600 into 8, 12,800. 1600 into 2, 3200. Total 16,000. Okay, so entry is bank account data, forfeited share account data to share capital. This is the entry for reissue. Now finally you have to find profit on reissue because we have forfeited 1600 shares from the shareholder. In the previous entry we have got balancing figure under credit side 6680. It's a gain for the company. So forfeited credit side. Okay, in the reissue entry, company reissued at 8 rupees per share and the 2 rupees is a loss for the company. So debited forfeited 3200. Here credit side 6680 and here debit side 3200. Now you have to find out net result, that is profit on reissue. That will be transferred to capital reserve. The last entry is forfeited share account data to capital reserve. That is profit on reissue transferred to capital reserve. In order to find out the profit on reissue, just see the forfeited entry and reissue entry and finally you can find the profit on reissue. Why? Because according to this problem, the entire shares were reissued. So, you need not calculate anything. Simply you can compare credit forfeiture and debit forfeiture in order to find the profit. So, credit how much? 6680. No. 6680 minus debit forfeited 3200. 3200. What is the difference? 3480. So, this is the profit on reissue transferred to capital reserve. 3480. 3480. Suppose company forfeited 1600 shares. No. So, out of 1600 shares, company reissued only 1000 shares. Okay, in that case, you cannot simply compare credit forfeiture and debit forfeiture. Okay, you have to calculate a cross multiplication in order to find the profit on reissue. Okay, so but according to this problem, the entire shares were reissued. No, in this case, you can just compare credit forfeiture and debit forfeiture to find the profit on reissue.